to your Mortgage Insider Update for this week. So tamer inflation and all the reporting from last week definitely brought rates more in line, but a little bit of bounce back this week as the market looks for direction on the Federal Reserve's next move coming in May. So let's check out the charts. As we start today off with the 10-year Treasury, we can see S&P 500 is down a little bit this morning. Mortgage-backed security prices are down, so red being bad over here. Interest rates overall, we're going to track the 10-year Treasury. Just real quick, up 4 basis points. This had gotten down into pretty low levels here recently, and we can see it's been bounced back up. So if we want to put some time on this, April the 19th, we see we're back at the 100-day average. We've crept back up here this last week. We hit our bottom back on April the 6th and seem to be coming back. One thing I'll point out is the stochastic indicators down at the bottom of the screen. So when the stochastics cross over, you'll see when it crosses over here, that's when this turn took place and we started seeing rates rising. We are getting to the upper end of that range, and if we go back in time, you can see back in February, we had a similar situation where the stochastics were rising. Then they did cross, but they actually maintained that really high level. So we could see an exacerbated amount of time with rates on the increase. But we do have our March 10th drop that we saw the huge fall off at the beginning of March with the banking crisis. We hit our lows here on early April, and now we're seeing it come back. So just to bring to the point here, rates do not move in a straight line. So by the time you hear rates have moved, they might have moved another direction since then. So keeping an eye on the 10-year Treasury is a great method to keep an eye on markets. Mortgage-backed security pricing, this is the actual mortgage-backed securities that when somebody locks in their loan and closes on their $500,000 mortgage, it gets pooled into a group of other mortgages called this universal mortgage-backed security. Investor pricing has come down significantly since the high points. So this was early April when rates were at their lowest. The investors were paying the highest premium for those bonds, and that brought the consumer the lowest rates. We've seen that bounce back this week. We're going to keep an eye on the upcoming news as we get more reports on real estate sales. Overall, nationally, we're seeing very few listings seasonally, and real estate prices do appear to be stabilized, if not on the rise again, as anecdotally, we are seeing clients back in multiple offer situations, especially on homes at or below the median price. So we'll keep an eye on the markets and come back to you next week. Take care.